Time now for our Bloomberg QuickTake, where we provide context and background on issues of interest. And today we're looking at Japan, which just signed a preliminary free trade agreement with the European Union. Japan's Prime Minister Shinzo Abe has a bold strategy: shock therapy for an economy that's been stagnant for 20 years. Abe tells voters the strong economic medicine he's prescribing is Japan's last chance to remain a world power. After early progress, though, on so-called Abenomics has stalled. Here's the situation. The theory was that unprecedented monetary easing in government spending would tackle deflation and buy time to implement much-needed structural reforms. Yet the goal of spurring inflation hasn't been met. The Bank of Japan introduced negative interest rates in January of 2016 in a bid to encourage bank lending. Stocks slumped and the yen surged to its strongest since 2013. Clear signs, according to Abe's critics, that Abe's plan was failing. Another key push, the Trans-Pacific Partnership Trade Agreement. It's trying to forge ahead. Even President Donald Trump withdrew from the deal, though. Here's the background. Japan's real estate and stock market bubble burst in the early 1990s. Wages stagnated and consumers reined in spending. And that led to 2 lost decades with no nominal growth in the economy. The devastating earthquake and tsunami in 2011 didn't help. The challenge of growing Japan's economy with an aging population has vexed a series of prime ministers. Here's the argument. Proponents of Abenomics see the Bank of Japan's massive purchases of government debt as the only way to shake off deflation. For now, though, Japan's yields remain among the lowest of any developed nation. Investors are looking for signs that Shinzo Abe is willing to take more bold steps, including attracting more women into the workforce and changes to labour regulations, areas where Abe must take on tough vested interests.